All Share Index year-to-date returns of the Nigerian equities market slowed to 10.7%. And I have Ayodeji Ebo, the head of retail investment at Chapel Hill Denham. He joins me now as we look at what's driving sentiments for the equities and the fixed income space today. Thank you so much for Ayodeji. Let's start with the equity space and find out what's driving sentiments for the markets.
Okay, thanks. I think for the Nigerian equities market, uh, before even the Russia-Ukraine war, the anticipation is that after the results, sentiments would turn negative as a result of the expected political risk, as investors try to stay in the sidelines and expect market decline and valuations become cheaper, so they can take advantage of that for long-term investments as we progress this year. However, the current war in Ukraine has also compounded that. Yes, while we don't see significant exit of foreign investors as a result of reduced participation of foreign investors in Nigeria, foreign investors contribute less than 20% based on 2021 data and January by the NSC. And but with the expectation that some sectors will be impacted. For instance, you look at the oil and gas sector. Yes, should be positive for the companies, but for Nigeria, government is bearing the brunt as a result of higher subsidy payments. And you look at the FMCG space, higher wheat prices would also impact on them in terms of pricing, and there's a limit to what the companies can pass to the consumers, which where consumers is also still struggling in terms of other higher prices, especially for the deregulated products, petroleum products like gas, kerosene, and diesel.
All right, we'll get to the oil sector in a minute, but before that, I want us to look at what we're seeing play out with the earnings, some of the major earnings that have come through, especially in these past few days.
Okay, thanks. So we're starting looking at the banking space. So I would say it's mixed. We saw that strong earnings from Zenith Bank, but you will also look at UBA and GTB. Yes, was fairly okay, but we know that investors have also priced in the expectation in terms of dividend. So there was no disappointment this year in terms of dividend payment. It meets expectation of investors, and that's why you would see that prices did not rally as much as it should, despite the impressive declaration. Uh, but if we also look at the expectation in terms of outlook for the banking sector, we know that the reintroduction of tax on fixed income instruments would also drag down PAT this year, because when you look at effective tax rates for most of the banking stocks are being within the single digit because of tax credit from government instruments. But this year, we expect tax to more than double, which will impact on PAT. And you also look at the cement industry. We expect that with the upcoming election, government would be very strong in infrastructure. We also expect that the impact of the setup of the infraco, if it takes off this year, would also increase infrastructure, and it will improve demand for their products. So we are bullish on that sector. The telecom sector too, we are also very bullish. It's a defensive sector, so that's why the crisis. We believe that people usage of data would still be sustained, and the agri space, the more I feel that demand would also increase, and for some of the the companies, they export. So with the higher increase in commodity prices, they benefit from that upside. So
Okay.
by and large, the equities market still remain very positive, but we expect that the major downside would see is the political risk,
Okay.
and investors would not will play very soft, will stay on the sideline, expecting to buy at a very good price. So what we always advise is to come in tranches, and nobody knows the bottom when the market begins to go down. But we still believe that these companies have strong fundamentals, and for those that are patient and have long-term horizon, there's still opportunities
All
in
right,
the
I did because I want
Nigerian.
to take you up on the oil and gas sector before we leave here, because quite a lot is happening in that space. When you look at what's happening globally, in terms of the rally we're seeing in oil prices, we're also seeing divestments happen in terms of international oil companies there selling some of their assets to some of the local players here, and then we're seeing the sectors up over 30% so far year to date. Very quickly, just a quick sense of what you're seeing play out there.
Okay, thanks. When you look at based on the listed companies, so you have the upstream and you have the downstream companies. So for the upstream, they are benefiting from the upside because the higher crude oil prices would also translate into higher profitability based on their projection for the year. So you would see that Seplat has rallied significantly, if not for the news on the for the NMPC trying to also exercise their first right of first refusal on the ExxonMobil assets. That is it would have been a major positive addition to Seplat. But when you come to the downstream space, because NMPC is still like the sole importer of PMS, and as a result of that, we don't expect any major benefits to the companies trading within that space, doing business within that space.
All right.
So overall, we believe that the oil and gas sector it's going to be positive for those within the upstream space, while it will remain neutral for those within.
All right, very positive oil and gas space there, according to Ayodeji Ebo, the head of retail investment at Chapel Hill Denham.